Need to check on this person. I don't know who this person is. Hold 1 second. Somebody named Standby family. KJ Bonner. Bonner. Yeah. Walk across all membership services. See if that person's a member. Yeah. Okay, let's go to work, family. Now, I want to go over something that we need to be paying attention to today that's maybe monetizable for us. And for many of you, you've been getting PAID on Wednesdays from this particular economic calendar report every Wednesday. And we've been getting your testimonials, and we certainly appreciate it. But some of you are saying, you know what, I'm a little bit off with some of the things that are released during the economic calendar report as it relates to this particular report. And I want to go over that with you in great detail. We're talking about this right here. Mortgage applications. Okay? Now let's talk through this before I actually look at this for actualization and monetization. Now, if mortgage applications are up, does that mean then that housing should be up, or housing construction, that is, should be down? Up or down? There you go, Jillian. There you go, King L. Okay. There you go, King Anthony. There you go, Devon. It should be up. Now, does anybody not understand and understand that? The majority of people are not buying homes cash. They're taking out mortgages. Okay. And when people say, hey, I just bought a house. Did you buy a house, which means you wouldn't pay for it cash? Or did you get a loan, which means you went out and got a mortgage? Two different things, okay? If you got a mortgage, you did not buy a house. You took on debt. You took out a loan. So don't get it twisted, okay? Don't get it twisted, all right? Now, since we got that misnomer cleared up, okay? So if mortgages are on the up, then housing should be up. If mortgage applications are down, then housing should be down. All right. Now, this was released at 7 a.m. this morning. Market opens at 9:30. It's currently 9:38. Now, watch how I look at this particular position, right? For possible intraday actualization and or monetization. But also, I want you to notice that what I'm going to do here is still be disciplined and not make a move, no matter what my findings reveal to me, until 10 a.m. All right? I want the market to go ahead and settle itself. So let's go into it. I come here, I click, I want to see what the numbers are. All right? This number is up. 3.8 is higher than negative 9.2. This number, however, is slightly down, with this number being up. Okay? So when I come here, my first position that I'm going to look at is a macro position, and that is ITB. Now look at ITB. Now, ITB, and this chart is late. There's no way it could be up and this be down. This time is accurate at 9:39. So see, you got to notice little things like this. There's no way that this chart could be moving to the upside and this be down. So we see now from one of our analytic devices, this particular screen, we see that something's slightly off. Okay? Now, we turn around and we see it trying to correct itself here. All right? So now, if indeed, let me show you another thing you always do. Take your cursor and put it right on the point of entry. That's showing me 9:39. This showing me 9:40 here. So this lets me know then that this right here is going to move closer to the positive. See it just go up? See it just go up? Because of this. There's no way I could have known that. See, I'm looking. All right? So when I see this at 9:40, see, just move up like this. This is why you come in here live, so I can show you. This has got to move to the upside. This will turn green. Okay? But see, when you're looking and you see, you catch all that. I was just about to say, and then it moved to the upside. Okay, so now this shows me then that based upon this number right here being higher than this number, that's why I've got this movement here. Everybody with me so far? Now, the lay trader and investor, or the trader investor who thinks he knows it all, he or she knows it all, if he sees this right here, irrespective of the time, being 9:40, 9:41, they'll jump out there and take a call. But look what happened. Did I not say? Look what happened. I was just about to say, but you better not take a call because it's not 10 o'clock. That thing could fall, and look, it fell just before your eyes. Did we see that? It is interesting. Yep. See, this is why you come in here live, so I could show you this live. Okay? Now, what we do is, because we're patient and we're skilled at trading and investing, we don't get caught up in this. The person who jumped out there and took a call right here, okay, now they're sucking wind just that quick, in a millisecond. So we're going to let all of this work itself out, and we're going to wait to 10. No matter how enticing it is to jump in up here. Okay? No, let it work itself out. Okay? Now, the next thing I want to show you is, look, you see it go right, look right there. Bam! Now, I know that's enticing. Oh, you want to get it. Don't you go for that yet. It's 9:42. And it's obvious this is way off because we see the chart. Always make sure you cross-reference these two. They got to be working in tandem. You can't have this thing moving to the upside dramatically like this, and then this thing here, all right, still showing a negative. So make sure they're moving in tandem. But once again, buy a ticket in a bag of popcorn for the first 30 minutes of the market open and take your time. There's no rush. Okay? You're in control. Let the market reveal itself to you. See, it just turned positive. Did I not say it was going to do that? It just turned positive. Okay? Now, this is a more accurate depiction of this. But still, don't take it for granted. Do not take your position yet. Now, we scroll down. We're still in the midst of our drill down. I want to check my volume. And that's extremely light volume. If a call option is applicable, gotta be careful. Okay? Because if we jump out there, don't set our trailing stop correctly at the onset, go in the water table with light volume, we may get stuck and can't get out on the backside of the water table. All right? So we're in the midst of our drill down. Our drill down is doing well for us and showing us what we need to do. So we stay inside and we just watch. Next thing we want to do is come over here and look at what might be the applicable option. If we look at taking it right after 10 o'clock. So when we come over, we want to be in the third Friday of the month. Is this the third Friday of the month on the option chain? Yes or no? Look at your calendar. No, it is not. So don't come in here and get cute and take this one. No, you stick to the rules. You come down, third Friday is sitting right there. First Friday was the 6th. Second Friday, December, is the 13th. Third Friday is the 20th. Click on the 20th. We're setting everything up now. Okay. All right, hold 1 second here. We go ahead and reload it. All right, ITB, third Friday of the month option. Okay. ITB. See right here? Did you see it fall right? See it fall right there? let all this work itself out. Let it work itself out before you go in. It's 9:45. See, we're not going to get caught up in all this. We're monitoring it, but we're not going to be, premature and get caught up in that. So we come over, go to options, third Friday of the month. Okay. Bottom line, King Charles, third Friday of the month. That's what you index off of first. Okay. Period. All right. Now, once again, that's the second Friday. All right. Index here, third Friday. Make sure it populates in both areas. All right. Now, if this position is at 45. All right. Is that 0.50? Is that 0.50? No. So now I'm going to show you a couple of things that right now tell you, even though that chart looks very enticing, why you don't go get this. Watch this. When I come down at 45 on the call, watch what I do now. When I come down, call option, I want to be at or below. All right. There's 45. Is that 10 or above? No. See that drill down? If that's not 10 or above, we know this is going to be flat when I click on it. And you're not going to be able to make any money off of it. Watch this. They got yesterday's. They need to update their screens. Update their screens. Now, while this is showing it being flat, the time is still off. See, that's showing flat. That's a day's range flat with volume less than 10. One of my elders, go to your platform, brokerage platform. Give me, I need the last and the day's range on the ITB December $45 call. And I need the December 20th. Okay, one of my elders go pull that for me, please. All right, thank you, King Mike. Please take a look and then hit me back and let me know. All right, back to this. Now, I'm going to show you another reason how wicked, okay, the last is still 79. Even today, check your time. Make sure that time is right. Okay, and give me the day's range. The day's range flat at 79. Is that day's range flat? Everybody listen to me, please. Mike's giving me some important information on this position. Is the day's range. Okay, 79 on there too. Flat. Okay, range is flat. Okay, one more thing, Mike. What's my volume? That volume should be below 10 if this is flat. What's the volume on it, please, sir? Okay, he said volume is down to 0. Okay, thank you. So everything that was supposed to be able to get from our drill down is right here. King Mike says this is 0. This is flat at 79, which lets us know we would not take that call option. Even though the chart shows that this position is up. Okay? Now watch this. I'm going to show you other reasons why you would not take this. See, our drill down is wonderful. One of the most important things you have to learn as a trader and investor is to know when not to take a position. So many people try to focus on trying to figure out when to take a position. Your first rule of thumb should be to know when not to take a position, because at least then you won't lose money. Now, next question. This is going up, but is that 0.50? No. Now watch this. Another reason. Drill down is telling us why we should not take the position. Okay? I come over to here to holdings. I'm going to look at the top two most heavily weighted positions. DHI and LEN. Now, one of these is going to be up much more than the other. Okay? And although they may be up. Okay, now see this right here? You see where it was up, and it's starting to sell off slightly. This was the one that was pulling the micro position. Now watch when I go to Lennar. Watch, I'm gonna back click. See Lennar? Watch this. This one is still trying to pull. See right here? Is that 0.50? Was DH Horton 0.50? See why you don't take the position nonetheless? Now, I know this looks pretty. When you look at this right here, you say, oh my God, I'm going to get paid before 4 o'clock today. Look at that. You look at this, you say, oh, I'm going to go ahead and take this position, take the call option now. Okay, da-da-da-da-da. And you forget about looking at this and looking at the holdings. Not to mention drilling down into the option like you saw me do. So even though we see all of this, would you take this position in 8 minutes at 10 o'clock? The answer is no. Let's pause. I open up for questions. Anything that you did not understand or overstand that you saw me do, ask your questions now. Okay, somebody says, Dr. Reese, how did you know these positions were going to move like this before you clicked on them? It happened before our very eyes. Fantastic. Look, I'm looking and seeing. And thank you for those positive comments. That drill down is not going to let me get out of bounds. And I'm controlling, I'm checking my emotions. Even though I see this, and I'm saying, man, that's profit right there. Because it moved high. See, it moved higher again. Unless this pops 0.50, and let me show you something else. Unless this number picks up demonstrably, just the volume today, I better not jump out there and get that position. Okay? Because look, if I jump out here and take this position, I'm going to be Billy Badass. And I'm going to jump out here and take a call. Even though I saw on the applicable call option, all right, that still ain't 0.50. That is flat. Okay? I'm going to get to that in just a second, Garnell. Thank you for your question, buddy. All right? When I get in the call option, I'm defying everything that my drill down told me. I'm Billy Badass. When I run up on water table and this thing pulls down, pull it up higher, see right there, slightly, facing opportunity there. What's going to push me through or maintain me through water table? There you go, nothing. If I don't have volume, there you go, family. You're right with me. I'm SOL. Volume just went up before my very eyes, but it got a long way to go to maintain me through water table. So I have to look at all these salient points. Now, if this changes and goes above 0.50, I go back into my holdings. I see those two are up demonstrably, which is holding this up at 0.50. I come back down here. I see this number is up 400, okay, thousand on the front side of the water table. I go back down, look at the applicable call option, and I see that I got volume that is above 10 or 12. Then I might look at it. But that's a whole lot that has to go on, right? Before I can consider this position. I don't get caught up in this visual. So many people will, and then they wonder why they're not making any money or they lose money on the position. Now, King Garnell asked the question. They help those of you that are new in the family, okay? and it is, we know that they play games all the time. Would a put give us any wins for water table? No. You don't want to do that. Because, once again, if we go into water table and it pulls down, which is fine, okay? The question then becomes, is it going to pull down far enough with volume? Still got to have volume, whether the position is going up or going down, for you to create arbitrage off margin and get paid. See, the fundamentals that are moving this up as we're looking at it, this is coming off of this report right here. So we don't want to buck the report. We just ain't buying into the report because the numbers are not sufficient enough subsequent to the release of the report for us to go ahead and get paid from the report at this time. So that's 0.40. Remember, we've been watching this since it was at 0.2. Remember, initially it was negative. But at the end of the day, unless and until it hits 0.50, we're not interested. And I know you're looking at this and you're saying, man, we can go get this. No, you cannot. Any questions on this? So unless and until this hits 0.50, don't fool with it. And then once it hits 0.50, you got to still come back and what? Index off your options. Okay? Get to the right week. It's at 45.50. Come down. There is a 45.50 in here. It's 45.50. 45, yeah, 45.50 right there. Okay? But look at that volume. When I click on this, it's going to be flat because there's no volume. Thank you, King Garnett, for asking the question. And although this is late, it's not 3:32. You do like I asked King Mike, call your broker directly and get the last. But it's going to be flat. If that volume is still at 1, it's going to be flat. No movement. And you do not invest, and you don't put your money in positions that are flat because they're flat. You're not going to make any money. You got to have movement on the position. And we don't care if the movement is up or if the movement is down. We can monetize it, but you got to have movement. And movement is put forth by volume. Volume is people trading on the position. If the volume is flat, that means nobody's trading on the position, which means you can't make money. You won't get paid. Okay? Now, somebody just asked a question. How many days do we wait before we jump to the next month? Let's see. I can't read the rest of this. And then with this question, they're referencing the strike price. Okay? It's like this. If you go to the option chain of a particular position, we can use this one. We can use this one. All right? And we come out here and we see, let me go back one. Get to the option chain. All right, see the option chain here? Now let's say today was December the 18th. And you're looking at this option chain. And you see the third Friday of the month is the 20th. Well, then if you're 7 days in front of the option expiration date, you roll to the next Friday, which would be the 27th. Okay? So 5 to 7 days is your window. All right? So you're 2 days in front of the option contract expiration date. Don't take that one. And as a rule of thumb, you want to index off the third Friday of the month. We clear on that? Any questions? Okay. So now, once again, before I go, I'm gonna do an ER for you. Okay. Real time. We'll look at Does anybody not understand and understand anything we went over? We clear? Okay. Now, pull your reference document from Monday's Virtual Trader Room. Pull your reference document from Monday's Virtual Trader Room, please. Thank you, everybody. Glad you enjoyed that. Okay. Let's go ahead and let's do a earnings report. And while you guys are pulling those reference documents, so at the end of the day, look at it now. It's 0.50. Let's go back for a minute. ITB is now more than 0.50. Look at what time it is. What time is it? What time is it? 10:01. Hint, hint. See why we wait to 10 o'clock? 10:00. Thank you for the kind words. See? Family, we know what we're doing with this. Now, watch this. That's more than 0.50. Watch. I'm going to go back to the ER in a second. I come here. Watch how the holdings. Watch how these numbers have moved up dramatically. Watch this. DHI. Watch. Look. That more than 0.50? Yes, it is. Watch. This is why we don't do things prematurely. Watch. That more than 0.50? Now it's a different ballgame. Now it's completely different. See, you're seeing this slide. Now it's different. Okay? Thank you for the kind comments. This is why we don't jump in positions before 10 a.m. Let it all work out in front of you. Nobody else going to tell you that secret. This is what I was taught when I worked on Wall Street as an institutional investor. That's a hidden rule, okay? You don't tell anybody about this. Now you know. You saw this slide. You wait until 10. I don't give a damn how enticing it looks. You wait until 10 o'clock. Because if you'd have jumped in early anywhere in here, you would have got your lunch eating somewhere down here. Let this thing settle out. Now you go back in. You go back and check your option chain. Indexing off the last of ITB, and then govern yourself accordingly. Let me show you real quick. Help you out. Now watch. We're going to see the volume on ITB kick up demonstrably as well. How do I know? Because I see this up 0.66, more than 0.50. Watch the volume. It's going to be triple digits. See it way above 100 now? Remember we looked at it, was 45, 60. Now, this is still a long way off from here, so you got to moderate your trailing stop effectively. But do you see everything we talked about in trading upon happening right here before your eyes? Real time. We clear on this? Before I go and do a ER residual. Now, if you have any questions, now's the time to ask the question. It's 10:04, and this just hit 0.50 like clockwork. See, the fundamental teachings of the institutional investors, those that control the market, the manipulators and the like, it's not going to change. It's like once you get to a certain level, let me say this. Once you trade on Wall Street and they take you into their bosom and they believe and trust in you, they will show you secrets of the markets. They'll show you when this happens, we all are going to do this. We don't give a damn if we're trading in Singapore, we're trading in London, Johannesburg, or whatever. There's a code. Listen. There's a code of conduct that all market manipulators, hedge fund managers, institutional investors, dark pool managers, those that manipulate and speculate in the markets, those that determine what the price of a pork belly, corn, soybeans, sugar, whatever is going to be on any given day that the markets are open. There's a code of behavior that they all adhere to. Now, once you trade for a period of time and they look at you and say, that person there has promise. It's not from the standpoint that you are a skilled trader and investor. If they look at you from the standpoint that, look, that person right there will be a great manipulator. They know how to throw a head fake, bait, and switch with trades. They know how to set up a position coming off a 52-week high or a 52-week low. They know how to camouflage a facing opportunity, et cetera, et cetera. So then what they do is it's called monitoring your book. They'll watch your book. Because see, when you trade on the floor in Wall Street, you commission based. So you have X amount of dollars, X amount of $1 million, and they're looking at you to see how much spread you can create, which is profit, called arbitrage, off your book that they give you, the value of your book. Now, when you start showing, when you start showing consistent, okay, prowess, then you get tapped. Now, there's an Irish pub that's 2 blocks over from Wall Street. That's where all the people get tapped, get invited to. You ain't gonna hear this nowhere else. I'm telling you what I know, because I went through it. Now, when they take you to this Irish pub, someone that you've never seen before will show up. They usually have 2 people sitting with you to monitor you. Then there's somebody you've never seen, somebody from what is called the booths, the boxes, like in a stadium that are around the top of the floor. Those are the people that manipulate all the stock markets around the world, okay? And all the commodities and the indexes. They're the ones that can move them one way or the other. Now, this person will come, you never heard of him, you've never seen him before. And he'll say, we've been monitoring your book. You've got potential. So what we're going to do now, you see, when you work on the floor, you either wear a green jacket, a yellow jacket, a red jacket, or a blue jacket. By the jacket that you wear, that determines what you are A, able to trade upon, and B, the amount of your book. So if a red jacket is calling in a trade to a green jacket, the green jacket already knows what the balance in the book of the red jacket is. But if a blue jacket gets a call on the floor, okay, from a yellow jacket, then he knows that volume and value of the book as well. He may opt to go with a yellow jacket as opposed to a red jacket because he knows he's going to make more money from a commission spread from a yellow jacket than he is from a red jacket. And if he gets a call from a green jacket, he don't give a damn about a yellow or red jacket. He's going to go with the green jacket because the green jacket has a higher balance in his book. Y'all get it? So somebody's always monitoring somebody else's book because all the traders, okay, work for the different brokerage houses that got the boxes around the top of the floor. So when you get invited to this pub, you've been making what is called a lot of book. You've been making a lot of money for your brokerage firm. So you get invited to this pub. Wood paneling everywhere, et cetera, et cetera. Somebody comes and talks to you and says, you got potential. Basically what they're saying is, you look like you can be a good manipulator by virtue of your book. Then they give you, it's like you've been initiated into a secret society. you will receive a certain book. Literally, it's a notebook. And in that notebook that you receive, it will have the codes. Listen now. Now, the codes are tied to market activity. The codes are things like, when this is 100 points or above, DIA gonna move up. If for no other reason, we can make it move up because we're the market manipulators. When this is 0.10%, and this is 0.10%, SPY, QQQ gonna move up. If for no other reason, we in the booth, we can make it go up. We could put false money into the market to make it go up. When a position is at 0.50, we're going to increase trade volume on that position to create arbitrage, to cause other people to trade on the position, and we're going to sell off up under them. That code book will tell you everything about head and shoulders, facing opportunities, 52-week high placements, condors, dead cat bounces, everything. So all of us have this book. So I know how everybody else is going to move when these situations present themselves. That's how we don't ever lose money. Why? Because we're setting the indexes. Now, 99.9% of traders and investors in the world, they ain't got the book on purpose. Because those of us that got the book, we got to make money off of those that don't have the book. We're monetizing their lack of knowledge and their ignorance pertaining to the indexes. That's why trading and investing on Wall Street is ruthless. You don't care about the hundreds of millions of other people around the country that may be losing money based upon your manipulation in the market. You don't care. All you care about is you got that double R sitting at your home in Martha's Vineyard, and you get to the office every day via helicopter. You don't even get in rush hour traffic. And you leave at 12 noon. You don't come back after lunch. Because you ganked and manipulated so many people, Bernie Madoff style, and we start trading at 5:30 in the morning. The market opens at 9:30. We start trading at 5:30. You know why? Because we're setting the market. When you come and look at any of these, listen, when you look at any of these before 9:30, what do you see sitting out there? It says futures, futures, futures. Before 9:30. Who do you think setting the damn future indexes? We are. We were. That's right. The people, there you go, Mike. The people in the boxes. So you need to ask yourself, oh, wait a minute. Futures? Who the hell determining what the future's going to be? I just told you. And when the market opens up, guess what? 9 times out of 10, does the market open up in the direction of the futures or opposite the futures? 99.9% time in the direction of the future. See, you need to look and see. You should have been asking yourself long ago, wait a minute. If trading and investing is nothing more than millions of people around the world trading and investing, then who is trading and investing before the market opens to set the future's direction? Who's doing that? Who has the power? Or what group of people have the power to do that? I just told you. And there you go, Mike. And I was about to get to that. And it's the same thing after the market closes. We get to trade up to 8 o'clock p.m. Eastern Standard Time. You stop trading at 4 p.m. Eastern Standard Time. So from 4 p.m. Eastern Standard Time to 8 p.m. Eastern Standard Time, we got a private market. But we trading on publicly traded companies. And ain't nobody gonna go to jail. So when you get up in the morning and you want to trade in the market at 9:30, you get the remnants of what we did from 4 to 8 the day before. You don't determine where this particular position, Home Depot, gonna open up tomorrow morning. We do it from 4 to 8 the night before. Get it? Now, you need to be sitting there asking yourself, why? You've been watching Bloomberg and CNBC for years. Why ain't any of these folks right here ever talk about this? Well, there's one or two reasons. One, either they don't know, or two, they know and don't want you to damn know. See, this is how the market works. And if you follow our strategy and techniques, I'm taking you into the intersanctorum. I'm showing you the information from what the initiates go through all the way through to the actual market traders. How in the hell can you not get paid? I'm showing you when they do this right here, that's smoking glass. Don't look over there. Look over here. This is what they're doing. This is what they're showing people. But this is what they're doing. And so many people get gullible. Get gullible to the extent that they're focusing on getting paid. That's all they're concerned about. Well, don't you know we take advantage of that? See, that's the person who through everything would have jumped into that position at 9:30 on ITB. Can you hear me? Give me a mic check. Can you hear me? Okay, great. But see, we take advantage of that because we know human behavior. Like I said, if you want to become a wealthy trading and investing, become a steward of psychology and sociology. So we know if we go ahead and show a chart to persons, when the market first opens, everybody wants to be first in line. So we got 30 minutes. Now notice now, hold on now. I'm going to step further. Because we're private here, that's why you join the Wealth Institute, so I can show you better than I can tell you, and I can reveal to you secrets of the market. Why the uber wealthy just keep getting more and more wealth. Now, we have the capacity to play with you from 5:30 in the morning to 9:30 in the morning by setting the futures on any index or position. If you go in there at 6 o'clock in the morning and punch in Home Depot, 7 o'clock in the morning, 8 o'clock in the morning, anytime before 9:30, you're going to see Home Depot, and it's going to have parentheses, it's going to have a percentage. And you should be saying, wait a minute now. And it's going to say down here, before market open. Now you should ask yourself, wait a minute now. Hell, I can't trade on it. Who is the people that are trading that are moving Home Depot and it say before the market open? Why are they so privileged that they could trade on it and we can't? It's because that's how the system is set up. Now check it. If you come to Home Depot at 8:30, market open at 9:30, and you see right here, before the market open, but you see market activity here, and you see it moving like you just see it now, you see it moving. You should ask yourself, wait a minute. If they're trading on the position, somebody making money or losing money before the market open. But if I go to my account at TD Ameritrade or Charles Schwab or whatever, I can't make a trade on this. They're going to hold it until 9:30 when the market opens. That should tell you what we are doing is we're manipulating the position. So when the market opens up, if this was, for instance, if this was pre-market, before the market opened, and it's down 1.80 right before the market opened, and let's say it's 9:29, is Home Depot going to open up or down at 9:30? There you go. It's going to open down. Now, we manipulated it so it will open down. All you can do is react to it. You didn't have a damn thing to say about it. So you either trade it and short it, or you go long and buy it up. But either way, who manipulated it? Who controlled your behavior, your action to and reaction on it? We did. By controlling the direction. There you go, Mike Palmer. By controlling the direction of the futures. Now, the next question you should ask yourself is, but wait a minute. That ain't have nothing to do with the analytics. It ain't have nothing to do with the EPS, the MACDs, the stochastic, the Bollingers, none of that. You right? That's why I teach you all about those analytics, but I don't spend a lot of time on it. Because that's much to do about nothing. That's majoring on the minor. What you got to focus on is people like me when I was like that. Okay? You got to focus on the player and not the play. How many times have you heard me say that over the years? Because the players are manipulating the play. Everybody wants to sit and analyze the play. That ain't got nothing to do with a damn thing. That don't have anything to do with the price of rice in China. You got to monetize the player. You got to know about water tables. You got to know about 10 a.m. You got to know about 0.50. You got to know about the holding strategies. You got to know about micro moves, macro. You got to know about dividend positions. You got to know where to index off those dividend positions to get paid. You got to know about facing opportunities. You got to know about caddying and all the other things that we teach you here in the Wealth Institute. When you do that, okay, then at the end of the day, you'll be able to go ahead and look and see and know exactly what the players are doing. Because let me say something to you. No matter what these three show, up or down, the market manipulators never lose money. Never lose money. Why? Because we manipulate the market. If the market's going one way and we're making money and we get enough suckers to buy in as the market's moving that way, then it's okay. Now it's time to take some more of their money. So we sell off up under them. Okay? They make money the opposite way. So when the market runs up and we get hundreds of millions of people around the world to buy up into the market, nobody makes money till they sell the clothes. So guess what? We sell off. Taking those people money who ran it up for us. When we sell off the position, right? Those people who stood on the sidelines who didn't buy up the positions when they were moving up, they didn't think, well, because the market's always, the pundits are always telling them this, they think, see, these people right here always running their mouth saying, hold on a second here, saying, buy into the market, let your money stay into the market, right? All right. So because CNBC and Bloomberg says that, guess what you do? When you see the market go down, guess what you do? You put your money in it. And we sitting there saying, and you all buy the market back up. And guess what we do? We sell it off. And so you need to understand and understand trading and investing is the monetization of human behavior and the minimization of risk. When we manipulate your human behavior, you then are getting us paid. And I remember after about 9 months of me working on Wall Street, I got to looking and I'm like, wait a minute. Somebody always makes money no matter if the market goes up or goes down. If the market, listen, If the market's going down, it's because somebody sold, and that somebody who sold made money. If the market, okay, is going up, all right, that's because somebody, once again, is selling and people are buying. Now, the only way for the person that sold something to get their money from the person that buys something is they got to sell what they sold to somebody else on the run up to somebody else. Get it? If I own a store and I buy something for $1 and I want to make a profit, I got to sell it to you for more than I bought it for. The difference between what I bought it for and what I sell it to you for, okay, is what? Profit. But if I buy something for $1 and I never sell it, I can't make a profit. Same thing with trading and investing, stocks. If I buy a stock or option contract and I never sell it to somebody, I can't get paid. And when hundreds of millions of people around the world sell their options or stocks, depending upon how many people are selling that individual option or stock, that stock will fall. It has to fall. Get it? Thank you so much for those kind words. Well, see, I try to pride myself on giving you examples to let you understand and understand exactly what's going on with the markets. Now, I can get it analytical as hell with you. Okay, if you want to go ahead and pay for an MBA or PhD over at the university, you come on through the classes. Yeah, I'll tell you all that ivory tower academic BS if you want. But then nobody's going to get wealthy going through my grad classes. That ain't going to happen. Now, the university going to award you with a degree once you earn it and this, that, and the other. Then you're going to steal you and you're going to frame it, put it up on your wall. Then you're going to figure out, look at it and say, now, how in the hell that going to pay my mortgage or feed my children? That degree sitting on the wall. You're going to know all the analytics. Okay? You're going to know how to do cross-variance analysis. You're going to know how to do and read yield curves and sign indexes and all that kind of stuff, but that ain't going to get you PAID. What I'm teaching you here in the Wealth Institute is going to get you PAID, and not just today, forevermore. Because they cannot change the rules of the intersanctorum. Because if they do that, the whole system will implode. We clear on this? Now, let me give you another example. Let me prove to you again. Somebody, anybody, give me, pull your reference document from Monday's virtual trader room. Look for a company ER that's being released today before the market opens. Okay, Wednesday before the market opens, or you can go ahead and look at Tuesday after the market closes as well. Either one. Which one you want? Okay. I got VRA from Queen Claudetta. I got PLAY from Jared. Okay. Tell you what, King Jared, I know you would agree to this. Let's yield to the queen, okay? Okay? We're gentlemen. All right, so we're going to go ahead and watch how I walk down VRA, all right? Submitted to us by Queen Claudetta, okay? So, Queen Claudetta, let me back up. From your reference document, was VRA, did they release their ER this morning before the market opened or yesterday after the market closed? BMO or, okay, before. Okay, great. So that's before the market opens. So watch this. VRA, Vera Bradley, all right? And Keep in mind, we don't take a position till what? 10 a.m. It's 10:30 now. Now, we see this position, they're losing, people selling like hell. Is that more than 0.50? Yes, it is. Check how I move on it. Move quickly. I drop down. Do I have volume? I got volume out the gazoo. Volume 2 day versus volume per day. Got it. Check. Drill down in full effect. Come back over. Now, this is not right here 1 billion. It's below that, 368 million. So I know this volume will have a massive effect on this, and I see it. Next, I'm in full drill down mode. I come over, click here. I want my options. There's my options. Third Friday of the month. Kick back over. Okay. It populated there automatically, the 20. Now, I'm looking at a put option, doing the drill down for a put option. I want to be at or above 10.85. I come down. They don't give me 11. They give me a 12. That's fine. Is that more than 5? Is that more than 10? Yes, it is. 60. I come here. Now I got to see whether or not there's any more profit that can be made off this position. It's already at 42.86%. Okay. Check my time. 10:14. About 15 minutes off. Current time 10:32. It's at 150. I come down. Look at my spread. From 45 cents where it opened up, or where it opened up at 50 right there, fell down to 45, went back to 50, to $1.50. My. They got PAID out to kazoo. 42% profit in less than 2 hours. It's 10:32. Market open at 9:30. So that's 1 hour. Okay, profit already popped. But now, the question then becomes, Kenneth, if you take this position now and it's at its intraday high at 150, do we think that this position is going to go in the water table, and we know the underlying stock's going to pull back some more? Do we think that this position will rise even higher, breaking its intraday high, so we could create arbitrage off margin? Because if I buy it at 150 now and it stays at 150, well, then I lose money because I have to pay my brokerage fees. I'm not trying to finance the lifestyle of the broker. I'm trying to get paid in spite of the brokerage fees. Some platforms are not charging brokerage fees, but let's just say for the purpose of illustration, you got to pay some fees for this, all right? So now, how do you figure that out? Well, this is what you do. You come down. You see you got volume up to this point, but they're trading at the intraday high. So what you do is you come over, watch what I do now, come back to summary, and I got to see how close the underlying stock is to its intraday low. Get it? If it's way off of its intraday low, then I know it could fall back down to its intraday low in water table. But if it's sitting right close to its intraday low, then I know the propensity of it to fall even further is nil, which means that associated put option has already run its course, and it's not going to run much higher than 150 on that put for me to get paid. So watch how my drill down works even further. I come down here. Watch what I do now. And I want to see how close it is to the intraday low. The day's range is 1080. That's the low. It's been as high as 1271, but it's been as low as 1080. Now, depending upon how close it is trading to 1080 now, that will determine whether or not I can make money off the position. Watch. 1080 there. 1084. That ain't enough. Get it? Now, if it was 1090, 1095, well, then I know water table, it could fall back down to 1080, and I can create a little bit of arbitrage, and I can get paid from that associative option. But if the intraday low is 1080, and it's just trading a nickel above that, hell to the no, I'm not going to get into that. Because I can't make, by the time I get into the position when I'm not going to make enough money to park my money there because I just got a nickel spread. Okay, now I went to 1091. Okay, I just got a nickel spread when it was at 1085. 1095, okay, great. See, I wanted to move higher. If it moves up, breaks 1105 or whatnot, then the same fundamentals that drove it down from that ER, gonna drive it down again in water table. So I need this thing right now to pull up here. When and if it pulls up there and it goes in the water table, I know with that volume, today being higher than the volume per day, it's gonna kick that damn thing back down. The difference between here and where it falls will cause my put option to rise, and I'm paid. But see, okay, see it move up? See it move up just then? So now I lay in the cut because as it moves up, the put's gonna get cheaper. And then, as long as it moves up before water table, now it's playing into my game because I'm gonna slide on up under, take the position before water table, wait until we get to water table, set my trailing stops, 20, 40%, 30% sweet spot. I set it at 30. Let it go in the water table. And then when that thing pull back down, now it creates my arbitrage off margin. And the cheaper put that I bought when it was rising, it's going, when the underlying stock was rising, made it put cheaper. The puts then is going to rise as the underlying stock falls. That's my profit. Because I got the volume pushing it to do it. Get it? So, here we go now. Boy, this is a good one. You picked out a good one, Queen. Okay? Now, do I take this now, Queen Claudetta? Or do I wait till this moves up higher? Well, others are answering. That's it. You wait because you want as much. You want this to move up as high as it can to fall back down in water table because we know it's going to pull back in water table anyway. So where it was down 9% when we first looked at it, now it's at 8. We want it to be in the 7s, high 6s. Because, see now, see, it just dropped again to 86 off of 95. See, we waiting. See that? So if you had to take it prematurely 2 minutes ago, now your trailing stop would have triggered because it dropped down at 86. So that's why I'm saying, I'm showing you the inside trick. You wait. That's why I say it needs to be up here. It can't be right here. It has to be up here. So a water table, it'll fall. That's your arbitrage, your differential. That's your profit. To do like 2 or 3 minutes ago, when it hit 95, you say, well, okay, I'm going to go ahead and get it. No. Because it's not moved enough. It has to move up here. This right here has to be up 11, like I said, 11, 15, something like that. Because when it does that, this is going to move up. When you sneak in up under before water table and take your put, the same fundamentals that drove it down off that ER, they're going to come to bear again. And because people are going to sell it off again in water table, those of us that are institutional investors that control the market, we would sell off anyway. And guess what? That's the arbitrage created for us to profit from. But see, no, I beseech any of you to tell me, have you ever heard of water table anywhere else? CNBC, Bloomberg, Motley Fool, Jim Cramer. But they all know about it. Now, somebody just said, this is what I don't understand about the day's range. It's only 10:30. How do, there you go, King Gary, wait. There you go, Jillian, wait. Okay. hold on, son. Let me read what he says. How do let's see. Okay, days range 1030. There's only 10. How do we know they calculate the days range? I guess that's what that says. Okay, it's only 1030. Okay, look. This right here, you talking about, I guess you're talking about the volume. Or if you're talking about the days range, okay, let me go back. Okay, you're talking about here. This is from when it opened today at 9:30 to 10:41. That's the current time. So the stock prices move from this as a low to this as a high so far. So as the day goes on, these numbers are going to change depending upon how the stock moves. Okay, so this is only reflective of the amount of time that the stock has been open up to this point. Okay, so wherever the stock was at its high for the day or wherever it was for the low up to 10:41 a.m. Eastern Standard Time, that's what the day's range reflects. You got that, King Anthony? So it's an ongoing tabulation. Yeah, oh yes, yeah, it would definitely change. So it's an ongoing tabulation throughout the day pertaining to how the stock has moved. Okay, so from 9:30 to 10:42, it's been as low as 1080 and as high as 1271. Okay, great. Thank you for asking the question. Okay. All right. Now, let me go over something with you. Queen Claudetta says something very interesting. Boy, you got the boy. This is a good virtual trading room. Boy, you guys are really, really getting into the crux. So, Queen Claudetta said they beat earnings revenue. Oh, wait a minute now. Talked about this just the other day. Now look, if they beat, you said beat, right? And they had the damn thing selling off. Let's get with it. Now you would think if they beat, this should rise, right? That's why you don't. There you go. Comment. I'm impressed, my king. That's what I'm about to take them. See, this all ties into our drill then. See, if you would have read this, look when this is released. If you just read this, you'd be like, oh, they beat. So in an ignorant manner, you come out and take a call option. You figure out, well, wait a minute, what the hell going on? I lost all my money in a couple of minutes because the position failed. But they said they did. Yes, they did. But listen to me closely. King Kermit stepped up and gave the answer. See, those that know, the institutional investors, the market manipulators, the hedge fund managers, and dark pool managers, they know something about GAAP reporting. GAAP reporting. I talked to y'all about this just the other day. And when did I say that GAAP reporting runs amok, runs rampant? What time of the year? The end of the calendar year, irrespective of when the company's fiscal year ends. At the end of the calendar year, the CFOs, the chief financial officers of publicly traded companies, I'm just going to say it like it is, they lie. They manipulate the numbers and they use something known as GAAP accounting. There you go, Queen Jacqueline. They cook the books. Get it? And so what they do is they put out fake numbers. That's what these are right here. But those that know, they be like, we know them GAAP numbers. We could really drill down inside and see that the company, although they're saying made money, all right, that ain't necessarily true. Sell off. Because you know why? Because the suckers initially, they're going to get information like this. Now keep in mind, now watch now. This came out an hour ago. It's 10:45, right? So that means the market opened up at 9:30, right? So when the majority of traders and investors around the world read this, based upon reading this, what you think they did? Oh, I'm about to show you something right now. What you think they did? There you go, Anthony. They bought calls and they bought the position straight up. They drank the Kool-Aid. But the market manipulators who make money off of the herd, the ignorant traders and investors, we know about gap. So we let the position run up initially from all the suckers who believe this right here. But we know what time of year it is, and we know about gap. So what do? Take the money and give PAID. We short the damn position. So much so, we drive it down 9%. We monetize the ignorance of people who don't know about gap, who looked at, well, yeah, their numbers were up. They beat estimates. They bought it straight up. Suckers. You should have waited at 10 o'clock. And you should have known about gap. And because you don't know about those two things, that ignorance cost you. Because we sold off up under your ass. All that's profit from here down here. That's negative arbitrage. Paid for via puts or shorting the stock straight up. Bingo. Game, set, match. Done and done. Y'all know about gap. Y'all know about 10 a.m. Didn't I tell you, we talked about this last week in the virtual trading room, that many of you over the years will be bewildered. You should be like, what? Damn, the company beat earnings and revenues, but the stock still fall. It fell because of what I just presented to you. Any questions on this? So to protect yourself against this, you discipline, you wait to 10. You don't get caught up in this. These folks out here, up here, they still ain't figured out what the hell, because see, they reading and believing in this. If you read and believe in this, you can't understand this or overstand this. This don't make sense. That's right. But because of your ignorance and your gullibility, and because you haven't done your homework, so you don't pass the test, you don't know about gap. You don't know about the 10 a.m. threshold. You don't know about a drill down. Drill down screaming at you every step of the way. Don't fool with this. You jump out there and take a call. See, and based upon this, when people jump out there, revenue surprises are 5.26% and 1.19%. Oh, I'm betting the ranch. I'm about to get paid. I'm going to go ahead and dump the yep, and you get got. You bet the ranch and go live in the prairie somewhere in a damn tent because I come and took the ranch from you. Get it? That's why we train hard to look and see, hear and listen. And I don't give a damn what they say. You monetize what they do. Get it? I couldn't have staged this at all. This is perfect. Thank you, Queen Claudetta. Perfect point, perfect illustration, which begat a perfect teaching moment. See, you got to understand and understand, family. Don't ever forget this. Trading and investing is warfare. We ain't out here playing. And when you're dealing in a war, those of you that have been in the military, by the way, thank you for your service. All right? You know, warfare is about trickery and deception. Trickery and deception. This is trickery and deception. Look at that, still going down. Trickery and deception, beloved. And remember this. In order for you to get paid, you got to take somebody else's money. Trading and investing is ruthless. Because somebody's trying to take your money. Trading and investing ain't nothing, it doesn't have anything to do with kumbaya moments. There are no kumbaya moments. When you come out here, you got to be a straight beast. Okay? I'm going to take yours and add it to mine. Now, I'm not going to ask you to give it to me. I'm going to take it. When you hear me sign off or ever talk about Wall Street, I don't say asking for something. I say we go take it. We make Wall Street pay us right here on Main Street. And everything, not something, is monetizable. And notice, all this ain't nothing but trickery and deception. They drank the Kool-Aid. And it was laced with cyanide. Y'all get it? But see, if you train and think like the uber wealthy, which means you got to break your conventional thought process. Good. Thank you for the positive comments. Great, King Anthony. You got to break your regular thought process. And you got to understand and understand. And I'm going to give you an example of something that occurred yesterday to give you a prime example. Family members, understand and understand as you look at this chart, as you see this right here, and as you see this right here, understand and understand everybody, not somebody, everybody got an angle. Everybody got an angle. There is a particular celebrity that I represent that has a new product that's coming to the marketplace. Listen to this now. How game is always in the mix. So I'm negotiating the launch of his new product with this product manufacturer, right? So the chairman of the company that's going to manufacture or produce this product, he has several patents in his name. Now listen to this now. Listen to this. So in October, our attorneys got with their attorneys and we agreed to launch this new product in February of 2020. Now the product has to be approved by the FDA. Listen there. Has to be approved by the FDA, which means there's a series of clinical trials that have to be occurred. They're called double-blind studies. And upon favorable outcome of those double-blind studies, okay, then we can bring the product to the marketplace. So I negotiated in, my client has got to own and be on the patent. So the other guy is a PhD research scientist who has several patents in his name. So he says, well, because your client is an international celebrity, and we see how we're going to make money on an ongoing basis, we will allow him to be co-owner of the patent. Now, my client has no pharmaceutical, no clinical background. He's just an international household name celebrity. So they're looking at how they're going to pimp his game. Now, I'm just going to break it down to you to the street level. Game, recognizing game. So they're looking at, look, we put his image and his brand on this particular product, we're going to get paid. So the master slave mentality kick in. So we're going to pimp this particular slave. We're going to give him a place on the rope. So I'm representing the slave. I kick back and say, well, then you know what you're going to pay my slave. That's right. Before any of y'all get paid, my slave going to get paid. Since y'all want to get into the slave mentality here. Which means then on this patent, now remember this, write this down. there's something called a process patent and a manufacturing patent. A process patent means, okay, if somebody does this and this via these strict guidelines that you set forth, okay, that ties into your patent. All right? A manufacturing patent is much more robust. It says if anybody on the planet or in the universe tries to put together these particular pieces, not the patent, not the process, but they put together these particular individual parts, they have manufactured what you have created, and therefore they got to pay you. Y'all got to remember those two now, because it's very important what I'm about to tell you to tie into this. And it ties into trading and investing and becoming wealthy. So we all agree on this. So I tell their attorneys, send my attorneys the deal in writing for me to peruse. They said, well, we'll get it to you. It'll be about Christmas time. I said, okay, fine. So yesterday I called when I get off the air with the radio broadcast to get a status update. They're on the West Coast, so they're 3 hours behind us. So they called me back, give me an update. I said, look, now, you know December is a notoriously short month because of the holiday. You need to get this paperwork to me because I want to make a decision and recommend a recommendation to my client before the year ends. We need to put it on our 2020 agenda calendar. Okay, Dr. Reed. So in the midst of the conversation, all right, they tell me, and they have told me back in October, we're going to have a research laboratory do the double-blind study. And then we'll take the findings with the written up articles and the final results, present them to the FDA for approval to come out with this special product. So about in October, they said there's a company called XYZ. I'm just making that up. I won't tell you the company name, that we've done our research through in the past. So Dr. Reeves, we recommend them because we know them, and we'll have them draw a quote for you for the patent research to be done, okay? The double-blind study. So I'm waiting, right? So now check it. Yesterday when they called me back, I said, by the way, do you have the approximate cost of the research study? Because I'd like to talk to my client about it. So he says, yeah, we're going to send you an invoice. Now listen, they expect us to bear all the costs. All right, but then they ain't going to be on the patent too. But their research company that they recommend is going to do the research for us. And this research company has done research for them in the past, and they've gotten patents. So the spirit tells me, Kenneth, do a deep dive into that research company. Now, the owner of the manufacturing company has a very, very, very unique name. I've never heard the name before in my life. So it's highly unlikely that somebody else on the planet going to have that same name unless they're related. So when I'm doing a deep dive into the company, the research company, while I'm talking to them on the phone, the manufacturer on the phone, down at the bottom of the website, you know where it says about us? You know, you see the tabs at the top of the website? It says, you know, contact us, about us, news headline. I click on about us. Down at the bottom of the page, they list the board of directors. I see a name like the guy's name, the research scientist that owns the pharmaceutical company that we've been negotiating with. Everybody got an angle. So I say, Dr. So-and-so, I see another person with your name on the board of directors. Is that person your wife or related to you? I put him on blast. He says, yes, I founded the research company. So, okay, so now if you founded a research company, you sending us an invoice for $500,000 to do the double-blind study. So you're going to get paid from the research company, right? Because it's your company. Then you want 50% ownership in the patent as well. So you're going to get paid again via the slave mentality forevermore from all the money generated from the patent, right? My client hit the ceiling. Dr. Reed's that double dipping. I say, you damn right. That ain't double dipping, that triple dipping. Because when we order product from the pharmaceutical company, which he owns, and we've already paid the research company to do the double-blind study, guess what? Every time I order product on your behalf, they sending us an invoice. They ain't sending this shit free. So he gets paid a third time. Game recognized game. Get it? How in the hell you gonna do a research study that's non-biased on a product that you are manufacturing, and you make the product and you own the damn research study, the entity that's doing the research study? If that ain't a conflict of interest, I don't know what is. Game recognized game. And to go a step further, listen now, if we're ever sued and the authorities do a deep dive, they're going to say, wait a minute, this product is innately flawed because you defrauded the FDA because you had a pharmaceutical research company that one of your co-patent owners owned. Do the research. You can't police your damn self. So therefore, guess what? Everybody gets sued. And everybody might end up wearing orange jumpsuits. That's not going to happen to my client. But see, I was able to look and see, hear and listen, and know that I know everybody, not somebody, everybody got an angle. This is a multi-billion-dollar pharmaceutical company. But see how they use that thing to go ahead and form. They said that ain't enough money. We want to get paid on the research side as well. So we're going to form another separate research company and keep it what is called arm's length. So unless somebody does a deep dive, they ain't going to never notice it too. So when we send a bill, first we come up with the formulation. And we say, yeah, we got a formulation that we think is going to be great, dynamite, et cetera, but we got to get it approved by the FDA. So we need to go ahead and have a double-blind research study done. Oh, by the way, this is a company that we've used in the past. We got a good relationship with. They're going to give you a good price. So you go for that because they did the formulation, right? You just don't know. You're getting played every step of the way. And then now notice, they don't put out a dime. They ain't paying for the formulation. They ain't paying for the double-blind study. And they billing you every time you order the product. You tell me that ain't trickery and deception. See, but dealing with Wall Street, my mind is trained so I don't give a damn what it looks like. The more shiny it is, the more my spider senses start tingling. What I'm saying to you, and I hope you glean from that, it doesn't make any difference whether or not you trading and investing and they pull this dipsy doodle, or whether or not somebody's trying to gank you and get paid off of something they formulate for you, something they have tested for you, and something they sell to you. They getting paid more. It's the same difference. Do you not understand and understand what I just submitted to you? It applies to life in general. When somebody approaches you, okay, especially in a business deal proposition, it ain't a matter of them looking out for you. It's a matter of them approaching you because they figured out a way, or they think they have, to make money off of you. Don't ever go into a mentality that somebody gonna make money with you. No, it don't work like that. Okay, absolutely, Jewish. Yeah, the research scientist, he's Jewish. Somebody just asked, was he Jewish? Yep. As the creator of my witness. But see, that's the way he's programmed. I'm not mad at it. Okay? But my client was hurt because he said, Dr. So-and-so, you knew this from the beginning. Why didn't you tell Dr. Reeves this when we were there? So I flew out. He and I flew out and met with these people in September. So they knew how they were going to set it up from the beginning. But see, the angels and the ancestors and the creator is so wonderful. See, when you're at the right chakra level, no weapon formed against you can prosper. What's the odds of me doing a drill down, just not feeling comfortable, just like we do with the stocks? We don't care what everybody else say. We drilling down. We drilling down. And then, and as God is created my witness, the last name on the board of directors list, at the bottom of that particular page, in small print, was his wife's name. I said, bingo. And so my point is this. Whenever you look at a trade, and you see this right here, something like this, and you see this right here, still do your drill down. Look like I did for that company, the board of directors page. Look for the fine print. Take your time. 10 o'clock going to get here on time. Let that thing do this. Instead of signing off, say, yeah, send me the invoice for the double blind study. I'll pay it. Go ahead and start manufacturing. Or you got the labels ready. Go ahead. Let's get started. Okay? We all going to make money again. No, let me tell you something. Understand and understand. When you go into a business arrangement and people say they want to make money with you, no. Remember, I tell all my clients this. They're making money because of you. That's two different things. I tell all my sports celebrities, when you sign with a team, don't you be out there talking about, sis, boom, y'all, the team, this, let me tell you that. The team owner making money because of you. He ain't making money with you. See, you get caught up in the illusion of inclusion. Don't you ever do that. Don't you ever do that. Do you know initially they sent me a proposal back to this pharmaceutical company, and my client's name wasn't even mentioned at being on the patent for the supplement that's being made. I said, hold on, whoa, no. You using my client's brand and likeness, he needs to be on the patent. Okay, well, you know, we give him 25%. We can, no, hell, what gave you the authority to arbitrarily say you're gonna give my client 25%? You just decided that you're gonna make that unilateral decision. It don't work like that. Well, you know, he doesn't have any pharmaceutical background. He doesn't have the credentials. He's not a PhD. He don't have to be, because you know what? He's an international celebrity. All right? You ain't gonna sell not one bottle of this stuff without his brand on it. So now, who bringing the real value to the table? So now, let's rethink this damn thing. We starting at 50-50. And now, since I found this out last night, 7 o'clock our time, they on the West Coast, sent them an email saying, look, this thing stops unless my client gets 60-40, and based upon quarterly reviews of sales, that will be renegotiated upward. Get up this morning, okay, and 5:30 a.m. Eastern Standard Time, got an email sitting on in my box with the revised contract at 60/40. Now that's sad. I had to do that. They should have been honest from the get-go. Yes, we can manufacture this. Yes, we can do the formulation. And we have a research company that we own that we want to go ahead and have the research done. But they would adhere to all the FDA standards, double-blind studies, et cetera, et cetera. And because that is our company, a wholly owned company that we started, we're not going to bill you for that because that's double dipping. And we all going to realize a gain from the research study. See, that's honest from the beginning. Very simple to do, but it's not in them. You see, when you think that Satan is the Messiah, they get you. But see, because I knew that I knew, okay, that they're making money, all right, because of my client, not with my client, I kept on drilling down, till I found that. And now my client's grandkids ain't got have to worry about nothing. Okay? We've already been around Thanksgiving, we were contacted by Pfizer as to when our studies will be done because they want to buy the supplement, and we ain't even brought it out. We scheduled to launch the supplement in February. All praises be to the ancestors and the creator. Same thing when you trade and investing. That which looks obvious is not necessarily what it is to be. Remember the quote that I gave you the other day? I asked you to write it down. There you go. Great. That's a prime example of what happened with this pharmaceutical company yesterday evening, last night, and my client. We clear on this? Okay. Next up, 2 p.m. Eastern Standard Time. What's going to happen? Who's going to be making an announcement? There you go, Mike. Who's going to be making an announcement? 2 p.m. Eastern Standard Time. Told you about this on Monday. Now you got to keep up with stuff like this. There you go, Dean. 2 p.m. Eastern Standard Time. See, this bothers me. All right? Queen Phyllis, Queen Carolyn, Nate Carter. What happens at 2 p.m. Eastern Standard Time? Mackie Robinson, Linda Harris, King Elder Kevin Rice, Kermit Dunwell, Jillian Otley, Jared Givens, our trusted gatekeeper, Gerald Parks, okay, Jamal May. Come on, brother. What happens at 2 p.m. Eastern Standard Time? Thank you, Nate. Thank you, Kermit. Thank you, Zenobi. The Federal Reserve will be releasing an announcement. Thank you, Phyllis. Now, it's not expected that they're going to increase or decrease the Fed fund rate, but you got to keep up with this kind of stuff. That's a major, major announcement. Okay, now, be on standby for your PAID alert, all right? Because I'll send to you what Powell does or does not say, and we govern ourselves accordingly. Don't think it's going to have much effect on the market, but we've got to monitor that anyway. All right? Very, very important. 2 p.m. Eastern Standard Time today. Now, the balance of your ER reports that I sent you Monday, utilize them. I do all that research for you to get paid. You're going to get that every Monday. So amongst all the other things that we're doing to get PAID on any given week, this is extra. And the intraday plays. Stick with our residual strategy until further notice on the ERs, okay? Don't get cute. That's King Mike Palmer said earlier today. Just stick to what we're doing and get paid. All right? And understand and understand, everything is manipulated. So you don't want to be one that's being manipulated. You want to monetize the manipulator. That's why we play and monetize the player, and we don't go ahead and try to play the player. Because those who seek to play the play get played. We clear on this? Excellent, excellent, excellent. Now, somebody just sent across, what do I think the impeachment hearings, what effect do I think the impeachment hearings will have on the markets? None at all. Nothing at all. And to the extent that they may have a minimum amount of effect on the markets, all right, that ain't gonna affect us. Because bull bear, we don't care. No matter how the market moves, we will get paid. We got weapons in our arsenal that will allow us to get paid. So we don't care nothing about that. See, you worrying about what you don't need to be worrying about. See, you showing doubt. My grandmother used to say, peace and blessing be upon us. See, you majoring on the mind. Haven't we been blessed to be making money through the trade talks and lack thereof and all the other shenanigans that have gone on pertaining to His Royal Highness Donald Trump? That's a good point. King Anthony Stone actually said, he sent across, we like drama. That's right, because drama is easy to monetize. So let whatever happens, happens. We don't care. We will get PAID from it, irrespective of that. Let me ask you this question before we leave now. What type of positions should you have in the foundation of your portfolio? If you only got 2 positions that you're trading on, one of them need to be a what? What type paying position? There you go, Jillian. I'm so proud of you, Queen. There you go, Zenobi. Look at my L. There you go, Ezekiah. There you go, Fred. There you go, Carolyn. There you go, L. There you go, Art. They're all telling all of you dividend paying positions. There you go, Jillian. Jillian says a minimum of 10 years or more paying a dividend consistently and raising that dividend. Ideally, we want 25 years, but we can accept 10. If you only got a position in your portfolio, it needs to be a dividend paying position. Now you do that one of 2 ways. If you want the dividend, you got to buy it straight up. But if you just want to get paid from it, because it pays a dividend, dividend option trifecta effect strategy, get paid 3 times, be done with it. So do not have a portfolio that does not have dividend paying positions. And I'm telling you now, I went over this yesterday in the Class When That Was radio broadcast. I went over the one thing that allows the uber wealthy to not be concerned about the markets. And that is dividend paying positions. Because they don't care. As long as that dividend is being paid consistently, like Queen Jillian said, 10 years or more at the minimum, ideally 25 years, and that dividend has been being raised, you're in there. And if the stock falls more than the dividend payout, then you sell it. Simple. And you get another dividend paying position. And we got dividend paying positions of which I've given you a list of and updated, okay, in the last 2 weeks that pay dividends every month. There is no excuse, family. None. And if I only have $50 or $20 to trade or invest, or $100 to trade and invest, and I can't afford to buy dividend paying positions straight up to get the dividend, then I'm optioning the hell out of it, because I can do that for $10, $20, $30 option contract, depending upon the position. Then when I make money, I can scrape off some of that money to go buy the stock straight up to get the dividend, or I can keep on doing our dividend option trifecta strategy to get paid and never own the dividend. That's unheard of. if you go to any economic forum and you ask during the question and answer session, how can you get paid from a dividend paying stock without buying the stock straight up? And everybody gonna tell you can't. No, I beg to differ, because we do it consistently here with something called a dividend option trifecta strategy. Utilize it, family. Okay? Excellent. Family, one of the things I want to leave you with today, and by the way, great interaction, great questions, okay? Great answers also submitted by you, Bumble of Answer with Wealth to family. And this is a prime example of learning and earning together as a village, okay? That's very important. We're a family, all right? Each one teach one, and we learn from each other. But let me leave you with this parting thought, family, that's applicable to trading and investing, to obtaining and maintaining economic liberation, and applicable to life in general. Family members, don't ever, and I talked about this yesterday in the Classroom Not Walls radio broadcast, don't ever get dreams and fantasies mixed up with reality. You've got to keep them separate. I talked a little bit yesterday about the quote unquote American dream during our Classroom Not Walls radio broadcast. The American dream for some is a nightmare for others. And there are some people who engage in American dreaming all their damn life. Listen to me. But you got to understand and understand. How much can you accomplish while you sleeping? And in order to dream, I've heard of daydreaming, but the majority of your dreams occur when you what? Sleep. So therefore, if you go through your life dreaming, how much can you accomplish? You've got to make your dreams become your realities. And to do that, your ass got to be up. You got to be wide awake, maintaining the proper chakra level, staying the right meridian, and handling your business. Don't you be sleep in a somnambulic state. That's when you get got. That's when somebody will come to you and say, look, I'm going to create a formulation for you. I'm going to go ahead and recommend a research company for you. And I'm going to go ahead and charge you for the manufacturing of the product and just give you 25% of the pack. See, that's for some damn fool that's sleep, that's dreaming. That ain't for me and my client, because we wide awake, damn near insomniacs. So my point is, don't get caught up in the fantasy. Deal specifically with the reality, for therein lies the charted course for you to obtain and maintain your economic liberation. Be on standby for your PAID alerts and your whiz alerts as the market dictates. And know that you're kings and queens, your gods and goddesses that deal with reality and don't live in the world of fantasy. Peace and blessings be upon each and every one of you. Go upon the Wall Street marauders and make Wall Street pay you right here on Main Street. This Aston Wall Street Virtual Trader Room is now dismissed. Reality as opposed to fantasy.